We think things have gotten a little silly. Cannabis is one of those great global super themes, and we've seen this now in country after country, Israel, Australia, Canada, where people end up voting with their dollars and just buying stocks because they're cannabis related. Valuations now have truly gotten ahead of themselves, and the retail investor here is now buying air effectively.
Sean, let's just back up a little bit. So you launched a cannabis-focused investment firm in 2014.
In 2017.
Oh, okay, our notes are wrong. 2017, but either way, you've got ahead of some of these moves. So performance over the last year or two, I presume, has been pretty strong.
It's been very good. We were up 100% out of fees last year, and as of the end of August, up about 46.
Yet, as we were just discussing in the break, you have been short Tilray already. So talk us through when you placed that trade, and I guess you've been squeezed a little bit on the move today and stuff.
Yeah, we were short right after the IPO because we actually felt that Tilray, in our opinion, is one of the weaker stocks relative to the kind of over $1 billion market caps in Canada. So after the IPO, it popped. We actually played the IPO because at $17 it was a good value, but at 30 we shorted it down to 20. And then now with the euphoria that's taken place post-Constellation, you're starting to see this dynamic of retail kind of monstrosity taking place in all of the NYSE and NASDAQ listed stocks. So last week we rolled into and bought a bunch of puts.
And I guess one of the reasons these stocks have taken off has been the prospect of being taken out, whether it's by a tobacco company or a drinks company of some form, alcohol company. Do you believe in that idea? And do you think, though, that the valuations have made those types of takeovers a bit less likely?
I think absolutely you're going to get alcohol, tobacco, pharma involved in the sector. However, you have to think about what are they doing. They're CPG companies or they're selling an end product. Right now, the Canadians are effectively just commodity producers. They're selling you an active ingredient, THC or CBD, and in that world, there is no brands right now in Canada. There's a bit of a medical brand, which is why we like CannTrust, because they have such a dominant position on the medical side. But if you think about rec hasn't even started yet, and day one of rec in Canada, which is October 17th, all that's going to be out there is flower and low concentrate oil. There's no branding. So the idea that someone's going to pay $5 billion, $10 billion, $20 billion is silly. There's much better assets, much better IP outside of Canada, in the US, in Israel, etc. You're spending a lot for air. Constellation, it was a different position because they had a multi-billion-dollar win on paper when they eventually doubled down.
It's interesting to hear you say that because so many of the stocks that are publicly traded are Canadian, and you hear so much from different investors that maybe perhaps the U.S. is behind the ball in terms of growing out its own cannabis industry, but it sounds like you have your eye on certain companies here.
Yeah, the U.S. is extremely interesting. California is the most competitive and biggest marijuana market in the world, and we think the brands that emanate from California are going to be the brands that really do dominate. If you go to Europe, if you go to Ibiza and you go to a dispensary there, there's literally a wall of Cali weed, is what it's called. And so we think brands are going to emanate from the U.S. We think distribution could theoretically emanate from Canada, but at these prices, you're really not getting much bang for your buck up there.
Just going to mention, Tilray has been halted again for the third time now today. Sean, you are long short across this space. So at the moment, when you think about the sector as a whole, are you net short or long? Is the sector as a whole overvalued?
Sure. The sector as a whole, it's very hard to say. It's too much of a generalization. We think Canada is overvalued. The U.S., there's great opportunities. The multi-state operators, the brands, they offer tremendous value. And likewise, as new countries come online, Europe, Israel, there's things there that make a tremendous amount of sense. But the idea that you're buying effectively a commodity producer, which is what Canada is today, for 10 billion plus just doesn't make a lot of sense.
I just want to go back to one of the points you made in the middle, which is that there's a lack of branding in terms of people's minds in Canada. Maybe that's not the case here. If a Coca-Cola or a Diageo or whoever bought one of these companies, whether they've got a brand behind them or not, do you think they'd lend their own brand name from drinks products or alcohol products to it, and that could make it a Tilray valuable without its brand yet?
They could lend their name, absolutely, but why do you need to spend $5, $10, or $20 billion for that? All you need is the licensing, the manufacturing, and the raw ingredients. There's not a tremendous amount of R&D, with the exception of maybe Canopy and CannTrust up in Canada, that really differentiates anyone up there versus the plethora of $100 million or less companies sitting in California.